Trendline strategy is a strategy that you can easily learn and trade effectively. No much rules, just simple rules to follow and you are good with it. In trading, anything you are doing there without having rules, you are only just gambling. So trading trend lines is a very good strategy and it is backed by data. We have the continuation trend line, we have the breakout of trend line strategy, we have the bullish continuation, we have the bearish continuation, and in this video I'll be teaching you all this for free. So stay tuned now and let's get started. If this is your first time in this YouTube channel, my name is Akimole Victor, aka VstreakFx. The goal I have for creating this channel is to make unprofitable trader profitable and to make what traders make consistent income with trading. So let's get started. Trendline has a very simple rule and we have 4 different ways in which we can trade the trendline strategy. First way is the bullish continuation. You can trade it bullish continuation, bearish continuation, bearish breakout, bullish breakout. So the first one is what? Bullish continuation. So when you want to see price bouncing off the trend line 3 times and also moving in an upward direction. For those who are new, who does not know what trend line is, this is a trend line tool. Can you see trend line? When you put it, and where you can actually add this trend line is at this place. Is the first. When you favorite it, it comes there. So that's one. So from the word trend is something moving in a particular direction for a particular period also. So this trend line, the bullish continuation trend line, when you hear the word bullish, you know that the market is pumping to the upside, market is pushing to the upside. So you want to see the price in an uptrend, and you also want to see it bouncing off the trend line 3 times. First, at the third time, that's when you are buying. At first one, you are buying here. Second, you let it go. You can see how it's reacting, breaking structure. And at the third touch, don't forget there's always going to be a break of structure showing the trend. If you are conversant with the market highs and lows, I made a video on market structure. You can check it out. We have the higher low, and we have our higher high here. We have our higher high here. So you want to see the market in an uptrend and bouncing up the trend line at least 2 times. The first time here, the second time here, and when you are interested, where you are really going to place your buy orders is at this third trend line here. And to be sincere with you, the market is just, because this is just a textbook of it. You will see price rejecting. There are chances that you see price may have rejected here before. You may see reactions here, making that level a key level. So that level is actually going to be a key level, but mostly just stick with 1, 2, 3 in an uptrend. And to make it a complete A setup, you must be looking for adding Fib. So first is what? Uptrend market. Let me type it out so you can also type uptrend market. Uptrend. Let me increase the font. Uptrend. You must what? Have the trend. You must have the trend. Oh sorry. Let me type it again. So bullish continuation. So we have the trend. You must trading with the trend. You must have the buying. You must have the 3 touch. You must have a Fib level. You must have a fib level. Sorry. You must have your candlestick pattern for entry. These are the things that must be for any continuation trade you are taking. You must one, be trading with the trend. 2, you must have a 3 touch on the trend line. 3, you must have your fib level there. You guys know I use this fib level always. See this, if you've not saved this fib configuration, do well to save it. So you have this fib, we have this fib here, 0.62, and you can see this 0.62, even with just a textbook trading, is lying at the what they call it, at the trend line. So at this level, you're looking forward to see any of these reversal candlestick patterns like the bullish engulfing, the morning star, the hanging man with the momentum candle, and you're looking forward to buy. And when you be buying, after you buy, you put your stops below your entry candle, and you target a solid 1:3. So this is how you trade it. You target a solid 1:3. So this is for bullish continuation, and for bearish continuation, it's also very, very easy. Same rules, same rules. You want to see price rejecting for the first time, second time, and the third time. Don't forget, we always have a break of structure. The body of the candle must close. Then at the third touch, and at the third touch here, this my drawing is very, very bad. At the third touch, I think I did not draw this well. Hold on, because it must be with the trend. So you have price coming here for the first time. Most times I'm trying to get the exact way I'm going to draw the trend line. So you have it 1, 2, and at the third touch, yeah, exactly. You must be having your break of structure. Identify the trend. The trend must be in your favor, where you have your lower lows and lower highs. This is your lower high. The lower high. Sorry. The lower high. Let me clone it. Clone. You also have your lower high here. Next lower high. You have your lower low. It must be in a downtrend before you can sell. The trend is your friend. Some of us fail to believe that. So at the third touch here, also matching with your fib level, don't forget. This is even making up to more of like an overall retracement. So at this place, you must looking forward to what? To place yourselves. There are chances the price will move all the way to this side. You must looking forward to place yourselves by using any of the reversal candlestick patterns like the bearish engulfing, the evening star, the hanging man, and you're looking forward to place your trade with that. So this is for the bearish continuation also, and the other one is the breakout. I told you there are 4 ways to trade the trend line. So let's say you have a downtrend where price has been bouncing up countless times, holding very well, and price now breaks that trend line. How are you looking forward to what? You're looking forward to take the trade at the retest of the trend line. You're looking forward to take the trade at the retest of the trend line. The best way to trade it is after a retest of trend line, there should be a level where price has been reacting so that it can form more of like an head and shoulder. So you have a head there. You can see this can head. Then this will now be a formation of the right hand shoulder, and it must be with the trend. You can see this is actually going in a downtrend and now it's switching towards its uptrend. It has break the bearish trend line. This is a bearish trend line. Some people call it liquidity. So it's where money is actually sitting for a very long time. So you're looking for what we're looking for also here. You can still employ the use of your Fib. You employ your Fib. Like I said, Fib is very, very important to catch the pullbacks. So you have your Fib, you must do the trend, your Fib level, then your entry candlestick must be very, very intact. You must be looking for the what? The entry candlestick. So at this place, you are looking for either the you are looking for either the morning star, the pin bar. You're looking for the bullish engulfing to take your buys. So this is for what? Trend line, bearish trend line being broken. So the next one is let me bring our rules. Okay, let me just write here. Is, let's say you have a bullish trend line. You have a bullish trend line holding strong, and price has been coming there over and over. Sorry. So when price breaks it, it is very essential to wait for the pullback towards the trend line. Must wait back to that level, and it must also match up with what? A key level. It must match with what? A key level. It match up with what? A key level. So, and it must be forming something like an head and shoulder chart pattern. So at this level, you are having your Fib, your trend. Your trend, you can see, is in an uptrend. Now it's switching to a bearish trend. You must have your Fib level there, and you must have your entry candlestick pattern to take a trade. You must have your entry candlestick pattern to take your trade. And don't forget, I said you put your entry and you put the stops at least above the candlestick. You can also still put it above the structure point. So this is how to trade the trend line strategy. So I want us to go into the chart, and this is gold, and look for any of these patterns. Okay, good. I think I'm seeing one. Look at this level here. This is a trend line being broken, and you can see a retest of it. You can see we even add an EMA, but let's say this did not actually catch up with the Fib level. It only came over to the structure point. You can see this key level. Price was acting as a level of what do you call it, supports here, was using resistance here as a key level, and the price gave a pincer candlestick pattern to take the trade, and we can actually have a 1:3, a decent 1:3. So looking for more price actions here. Price may still bounce off back at this level. Just bounce off back, then we have it. We have the price coming back to this level. Okay, let's get more. You can see this. We have one touch here. This bullish continuation. We have one touch here. We have the second touch here, and we have the third touch here with a very strong momentum candle. You can see very strong momentum candle, and not forgetting that we have our key level there. You can see very strong support. If I'm to draw my fib, you can see I have my 0.62 fib level there. You can see bullish continuation, bearish candle being broken. Let's see, gold has been in an uptrend for a while, so it's very difficult for us to see a bearish trend line. I think this is still bullish. Do not get it. Okay, look at this. Look at how this level has been holding. You can see how this level is so strong. You can see how this level is so strong. And look at this particular trend line. You can see the price did not give an entry. The price did not give an entry at the retest of the candle. No structure. You can see before it switched to the upside. But you can see how this level has been holding very strong. 1, 2, 3. You can see the third touch, and very nice. Let me place the buy so you can get it. Put your stops above. You can see. So you can see putting your stop below the candlestick that you entered of. This is a bullish engulfing candlestick pattern. So this trendline strategy is a very simple trading strategy. You only need to follow the basic rules of identifying your trend. Where are those rules? So you only need to learn how to follow what your trend. You need to identify how to trade simple market structure. I made a video on that, you can check it out. So that trend will help you get where the market direction is going to, and you want to see a 3-touch trend line to the upside or to the downside, that you want to actually benefit from a 3-touch, and you want to have a fib level there, and you want to have a entry candlestick pattern there. And sincerely, if you backtest this, it will put the odds of success in your favor. This is all on trendline strategy. If you need to gather data yourself, pick any of the backtesting tool online, backtest this 4 trendline strategy, adopt it to your trading system, trade this alone, and you achieve success in the Forex market. This is the secret I love to share to you on Trendline. If you have any information, any question, drop it in the comment box. If you want to get connected to me directly, check my description box. You can actually message me from there. I will reply you instantly. So have a wonderful day. Thank you.